Hello viewers, in this video I'll be going over WTI crude oil, ETF ticker symbol USO. So let's check the 1 hour chart. We do have a nice reversal from a negative MACD to positive MACD. However, we are overbought on the 1 hour RSI on Wednesday. So on the 4 hour chart, we start to see a possibility that we may turn positive on the 4 hour MACD. I do see that as actually, that is a daily chart, so let's move back. So on the 4 hour, this is the 4 hour MACD. We convert and we still are in progress of hitting positive MACD, and we still have not hit overbought territory on the RSI, so we have a good chance that this may continue on higher as long as we close new highs, so above recent highs. So as long as we close or make higher highs, that should be a positive on the reversal. So at the moment, ideally we need Wednesday's candlestick to close above the 200-day moving average. Once that's occurred, we have a good chance that this uptrend or reversal is intact. But there is a concern that I have since we made a gap overnight between Tuesday and Wednesday morning. So ideally we want these two candlesticks to fill in the gap, or fill in the gap between those two candlesticks. So for support, if we do lose steam and get rejected off the 200-day moving average, we may see a retracement back to the price of $11.20. And if we do proceed to move on higher, I do see the trend touch the 150-day moving average at the price of $12. So if we do move on higher, that price movement is roughly around 2%, and if we do get a rejection and head down lower, that price movement is around 4.6% lower. So let's head to the forecast model. On here I'll go day by day where WTI crude oil will head to in next coming days. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these forecast models we should focus on? Ideally, the model that is the best match to the current trend. We have the current trend right here, and I believe this trend down here is the best match to it, and this trend dates back to June 15, 2018 to August 28, 2018. So let me point out why these two charts are similar. So what we have here in the beginning of the trend, we started off below the middle Bollinger Band, and then we proceeded to touch the upper Bollinger Band right at this instance. And next we see it lose steam and touch the bottom Bollinger Band. So we have this price action here. And then towards the end, we see it revert to mean and have a price slightly above the middle Bollinger Band right towards the end. So if we see that action in the trend in question, so we have in the beginning start off below the middle Bollinger Band right there. Next we see it touch the upper Bollinger Band. Next we see it lose steam to have a bunch of days where we remain below the middle Bollinger Band. So next we see the price action start to finally revert to the mean and close above the middle Bollinger Band for several days. We see that price action similar to the current trend. So we have 1, 2, 3, 4 points. We also see 1, 2, 3, 4 points. So there is reason to believe if the trends and patterns are the same, the outcome and forecast should be fairly the same. So back to the forecast model. Again, the forecast or model or trend we just examined was June 15, 2018 to August 28, 2018, and it looks like WTI was only up around 41 basis points, so we may see sideways price action till next week and next coming days. And that is all. If you enjoy this content, feel free to like, comment, subscribe, and thank you for watching.